This video is for educational purposes only and should not be considered financial advice. Tight consolidation provides explosive returns. Intro: how to spot consolidation using the TTM squeeze, when to get into the trade, examples. Recap. Intro: the TTM squeeze is the perfect tool to find consolidations. Typically, we avoid consolidation because these are times when the market will give false signals and entice traders to get into losing trades. The TTM squeeze will show you on the histogram when the market is consolidating by showing dots at the zero line of the histogram. When price has more than 3 dots, you know the consolidation is worth paying attention to. How to spot consolidations. The reason why John Carter has made a decent living trading his strategies and selling his indicators is because the explosive moves come from these consolidations. The trick is to know when to get into the trade. John Carter's entry technique is to wait for the dots to stop appearing and the histogram to turn blue for a buy trade and red for a sell trade. The problem with this approach is that the market loves to give false signals, or what ICT calls a Judas swing. What you want to watch for is the fast move that seems to not want to retrace at all. This will give you a hint that the retrace will be much bigger. When to get into the trade. What's fast won't last. What's slow will grow. If you use the method we use on this channel for trade entries and take the level 2 entry of the market maker model after a trendline break, you will have a better chance at getting on the right side of the breakout of the consolidation. Let's look at some examples.
During the Asian session, we see consolidation right after midnight, and then we see the TTM squeeze presenting the 3 dots at least. The dots are really small on this platform, but you can see that there's more than 3 dots. Basically, one candle represents a dot. So we see a fake out because we have a signal to go short with this TTM squeeze. However, we see once the Asian session opens, then we see another consolidation. And then here is the TTM squeeze signal to go long. However, the move has already happened. So we use our modified ICT entry where we're using a trend line break and then our level 2 entry, which is 50%. So we see a level 1 created, then a level 2, price retraces 50%. That's our entry, and it happens right off of the trend line. Then price moves all the way up to the Fibonacci extension. Of course, we draw our Fibonacci extension off of the breaker block, which is here, and we draw our Fibonacci extension here, and that's where we get it. You can see the opposite trade occur right here, where price creates a level 1, then a level 2, and then 50% retracement entry. Stop loss goes above the origin of level 2. That happened here as well. And then price creates that level 3. Then you want to move your stop loss to break even. Price moves back in, but does not tap your stop loss. And then we get a move downward. And we get all the way down to 10 to 1 reward to risk. Price makes a move all the way down. And of course, that's also after our TTM squeeze setup. We see price consolidating here, and we have our TTM squeeze showing up right here. We have at least 3 dots, and then that is our entry right here. In this example, during the New York session, we see again a tight consolidation. We see our TTM squeeze. This squeeze over here fired, but it gave you a false fake out. It gave you a false direction and a fake out. Then we have another consolidation. Then we have another TTM squeeze, more than 3 dots. And we're looking for our level 2 ICT entry off of a trend line break. And we get that trend line break here. We have a level 1 created right here. This broke this swing high. And then we have a level 2 created right here. This broke this swing high. We have an entry right here at 50% of the level 2 move. We put our stop loss right behind that origin, and we take the ride all the way up. This one we got out at the 300 Fibonacci level, but price continued to go further. We just did not want to be greedy. And what is great about these trades is your tight stop loss. When you have that consolidation, especially with this one, it gets really tight and your stop loss can be really close to your entry point.
To recap, tight consolidation often leads to explosive moves. Don't avoid them, exploit them. Use the TTM squeeze to identify when the market is in compression. Look for 3 or more dots on the 0 line. Don't jump in on the first signal. Instead, watch for the fake move, then wait for a real level 2 entry after a trend line break and a 3-candle swing confirmation. Use the 50% retracement and Fibonacci extensions to manage your targets. If you master this strategy, you'll stop getting caught in choppy markets and start catching the big runs. If you found this video useful, please hit the like button, subscribe, and drop a comment with your thoughts. Let me know if you've traded this setup before or if you have any questions. Thanks for watching, and I'll see you in the next video.